Chapter 1. Fibonacci Retracements and Rules for its construction. First topic is retracement levels. The very first tool we will review is Fibonacci Retracement. It can be applied as an independent tool or as a complement to various trading strategies. It is often used to forecast changes in price, which allows in defining where the financial asset will move and how to profit from this movement. Since Fibonacci retracement levels act as a support and resistance, classical definition suggests that correction may end when price reach one of the key retracement levels. And these levels are 38.2, 50, and 61.8%. In cases when price correction reaches one of those levels, correction can be considered complete and we must open transaction in the direction of the previously formed trend. Here we are faced with two important questions that must be answered before buying or selling an asset. How to determine which of the levels will become a key level, and what is the probability of price reversal after reaching one of the key retracement levels. To answer these questions, we need to create a certain filter which should be used to open transaction from the key retracement levels. To do that, we have to include three additional Fibonacci ratios. Apart of mentioned earlier key levels 38.2, 50 and 61.8%, we will be using additional 3. 23.6%. This value is obtained by subtracting 38.2 level from 61.8. 14.6%. Value obtained by subtracting 23.6 from 38.2. And lastly 9%, which we get by subtracting 14.6 from 23.6. Both 9 and 14.6% refer to weak levels, but they are very important when it comes to opening transactions in the early stages of correction. But this will be discussed later on. 23.6% level is often applied as a support or resistance along with the key levels. 38.2% cannot be assigned as a key level. This is because quite often price breaks this level and reaches 50 or 61.8%, but it is very important in decision making. Now let's have a look at a schematic plan of constructing Fibonacci retracement. Figure above shows representation of two price movements, XA trend and AB correction. From maximum X to minimum A in the downtrend, so that 100% level is included in maximum X and 0% in minimum A. And accordingly from minimum X to maximum A in the uptrend, so that 100% level is included in minimum X and 0% in maximum A. It is worth to note that under Comprehensive Fibonacci Analysis, retracement should be constructed only on the shadow of the candle. This means maximum and minimum prices. Opening and closing prices should not be used in construction of this tool. Let's have a look now on a few examples. This is BTC USD 4-hour chart. Here key minimum was formed at point X. After some time, price reached a local maximum at point A. This was followed by corrective downturn with an ascending trend. In this example, Fibonacci retracement is built on segment XA. Note that we used maximum and minimum prices. Currently, price reached a 61.8% level and ascending dynamics is observed. In this example, key maximum was formed at point X on link BTC 30 minutes chart. After some time, price reached local minimum at point A. Then the corrective uptrend followed. Now, price touched key resistance level of 61.8%. Therefore, a local downturn of price could be expected within the descending trend XA. Let's have a look at last example. Iron BTC 1-hour chart. This cryptocurrency pair formed maximum at point X. It dropped sharply until minimum at point A was reached. Then upward correction evaluated but has been rejected at 50% level. Few days later, price took another attempt and currently reached key resistance level at 61.8%. In Chapter 3, you will learn about internal patterns. On this very chart, price developed IP3, which gave a signal to open transaction at 23.6 level with target at 61.8. we would certainly make a profit here. So, in basic terms, this is how Fibonacci retracement should be constructed. If you have any questions, DM me on Telegram or drop me an email.